Hey everyone, welcome back to Corporate Decoder. Today, the Advisors Inner Circle Fund III just filed its semi-annual report for the 31st of March 2026, and I am seeing a very interesting breakdown of their holdings that tell a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a look under the hood of two specific funds within the larger Advisors Inner Circle Fund, the third family, the SouthernSun Small Cap Fund and the SouthernSun US Equity Fund, showing us exactly where your money has been invested and how it performed over the last 6 months. This document is a certified shareholder report, basically a summary of how the fund is doing filed with the US Securities and Exchange Commission. We're looking at a report for the period ending the 31st of March 2026, covering the last half of their fiscal year. The main filing itself is pretty standard, telling us who the registrant is, their address, and key dates. The registrant here is the Advisors Inner Circle Fund III, and this report focuses on two particular funds under its umbrella, the SouthernSun Small Cap Fund and the SouthernSun US Equity Fund. These are funds designed to grow your money over the long term, specifically through appreciating stocks. They offer different classes of shares, Class N and Class I. And this report details the performance and investments for both. The report details the financial health and investment strategy for the SouthernSun Small Cap Fund for the period from the 1st of October 2025 to the 31st of March 2026. Let's talk about costs. For the SouthernSun Small Cap Fund, Class N shares, a hypothetical $10,000 investment, would have cost you about $68 over these 6 months. That is 1.36% of that hypothetical investment. For Class I shares of the same fund, that cost was a bit lower, $56 or 1.11%. This difference between share classes is important as it shows how different investment options within the same fund can have varying expense structures. Now, let's look at the big picture numbers for the SouthernSun Small Cap Fund as of the 31st of March 2026. The total net assets were a substantial $238,490,545. That is a lot of money invested. The number of holdings was 23, so they are not spread super thin, but they are not concentrated in just one or two companies either. The total advisory fees paid amounted to over $1 million, $1,009,010, and the portfolio turnover rate was 17%. That turnover rate tells us how often they are buying and selling investments within the fund. A 17% rate suggests they are not actively trading, but rather holding onto investments for a decent amount of time. This is where it gets really interesting. The report breaks down the sector weightings for the SouthernSun Small Cap Fund. Industrials make up the largest chunk of their investments at 32.1%. This sector includes companies that manufacture and distribute goods like machinery, aerospace equipment, and construction services. Next up is consumer discretionary at 18.1%. These are companies that sell products and services people want but do not necessarily need, like cars, clothing, and entertainment. Information technology comes in at 16.8%, which is your typical tech sector, including software and hardware companies. Materials are at 11.2%, covering companies that extract and process raw materials like chemicals, metals, and wood products. Consumer staples, which are everyday necessities like food and beverages, make up 9.5%. Financials are at 5.3% and healthcare is at 4.8%. So you can see a clear tilt towards cyclical sectors like industrials and consumer discretionary, which tend to do well when the economy is growing, and a smaller allocation to more defensive sectors. Now let's look at the specific companies these funds are invested in. These are the top 10 holdings for the SouthernSun Small Cap Fund. Darling Ingredients is the largest holding at 6.8%. They are involved in the rendering industry, processing animal byproducts into ingredients for various uses. Murphy USA at 6.0% is an operator of gas stations and convenience stores. Boot Barn Holdings, a retailer of Western and work boots and apparel, holds 5.7%. Live Oak Bank Shares, a bank focused on small businesses, is at 5.3%. Extreme Networks, a provider of computer networking equipment, is 5.2%. Louisiana Pacific, a manufacturer of building products, is 5.1%. Brinks, a security company providing cash handling and secure transportation, is 4.9%. Dorman Products, a manufacturer and supplier of automotive replacement parts, is also 4.9%. US Physical Therapy, providing outpatient physical therapy services, is at 4.8%. And Crane NXT, a diversified manufacturer, rounds out the top 10 at 4.6%. Now, let's shift our focus to the SouthernSun US Equity Fund. Also, as of the 31st of March 2026, this fund had total net assets of $45,708,793. It also holds 24 investments and had total advisory fees paid of $137,355. The portfolio turnover rate here is slightly higher at 20%. The sector breakdown for the US equity fund shows a heavy concentration in industrials at 42.3%. This is even higher than the small cap fund, indicating a strong bet on companies in this sector. Consumer discretionary is next at 14.8%, followed by information technology at 12.3%, consumer staples at 8.5%. Materials at 7.0%, healthcare at 4.6%, and financials at 4.0%. Again, a strong emphasis on industrial signals, a strategy likely aimed at capitalizing on economic growth. For the US equity fund, Darling Ingredients is still a top holding at 6.7%, API Group, which provides specialty chemicals and industrial services, is at 5.9%. Murphy USA follows at 5.6%, Boot Barn Holdings at 5.4%, Generac Holdings, a manufacturer of generators and other power equipment, is at 5.2%, US Physical Therapy at 4.6%, Louisiana Pacific at 4.6%, Broadridge Financial Solutions, a financial technology company, at 4.1%, Crane NXT also at 4.1%, and Extreme Networks at 4.1%. Diving into the actual financial statements, let's look at the statements of assets and liabilities for both funds. For the SouthernSun Small Cap Fund, total assets stood at over $240 million, with liabilities of about $2 million, leading to net assets of $238,490,545. For the US Equity Fund, total assets were around $45.8 million, with liabilities under $90,000, resulting in net assets of $45,708,793. It is clear the small cap fund is significantly larger in terms of assets under management. The statements of operations show us the income and expenses for the 6-month period. The small cap fund had total investment income of about $1.07 million, but total expenses including advisory fees, administration, and others came in at over $1.5 million, resulting in a net investment loss of $457,874. However, this loss was more than offset by net realized gains of over $25 million and a net change in unrealized depreciation of about $18 million, leading to a net increase in net assets from operations of over $6 million. So, while the fund lost a bit from its core investments, it made that back and then some through trading gains. The statements of changes in net assets show how the net assets of the funds have changed. For the small cap fund, over the 6 months, operations added over $6 million. However, distributions to shareholders were over $11 million, and there were net capital share redemptions of over $32 million. This led to a total decrease in net assets of almost $38 million. This tells us that many investors were redeeming their shares, even though the fund performed well operationally. The financial highlights provide a per share look at performance. For the SouthernSun Small Cap Fund Class N shares, the net asset value per S-Hare at the end of the period was $25.34. The total return for the 6 months was 1.81%. The ratio of net expenses to average net assets was 1.36%. Which is quite significant and aligns with the costs we saw earlier. For the Class I shares of the small cap fund, the net asset value per S-Hare was $26.62, and the total return was slightly higher at 1.95%. The expense ratio here is 1.11%, reflecting the lower costs we noted earlier. Looking at the US equity fund's financial highlights, Class N shares ended with a net asset value of $13.07. The total return for the 6 months was a modest 0.98%. The ratio of net expenses to average net assets was 1.40%, showing that this class of shares in this fund is more expensive than others. For the US equity fund's Class I shares, the net asset value was $13.09 and the total return was 1.06%. The ratio of net expenses was 1.09%, which is more competitive and aligns with the lower costs for Class I shares we saw previously. The notes to financial statements are crucial for understanding the details. They explain that the advisor's Inner Circle Fund III is organized as a Delaware statutory trust and registered as an open-end management investment company. The report covers 2 specific funds, the SouthernSun Small Cap Fund and the SouthernSun US Equity Fund. The notes also detail how the securities are valued. They use quoted prices in active markets for identical securities when available, which are considered level 1 assets. If those aren't available, they use other observable inputs like interest rates or credit risk for level 2 and unobservable inputs for level 3. For this period, all the fund's investments were classified as level 1, meaning they are valued based on readily available market prices, which is generally a good sign for liquidity and transparency. Finally, the report outlines the risks. For both funds, there is market risk, meaning stock prices can go up or down. Management risk is also present as the success of the funds depends on the advisor's skill. Value style risk means that if their assessment of undervalued stocks is wrong, the fund could lose money, being non. Diversified means they are more susceptible to a downturn if one of their few holdings performs poorly. Sector emphasis risk is key here, especially for the US equity fund, which heavily favors industrials. If that sector tanks, the fund will feel it significantly small. Capitalization companies risk highlights that smaller companies can be more volatile than larger ones. For the US equity fund, there is also mid-capitalization risk. Liquidity risk means some investments might be hard to sell quickly at a good price. The small cap fund also has foreign company risk as it invests in foreign companies traded on US exchanges. Interestingly, the report details shareholder concentration. For the small cap fund, Class N shares, just 2 shareholders hold 74% of the shares. For Class I, 2 shareholders hold 79%. Similarly, for the US equity fund, Class N shares have 4 shareholders holding 83%, and Class I shares have 4 shareholders holding 61%. This is a very high concentration of ownership, meaning a few large investors could significantly impact the fund through their buying or selling decisions. This level of concentration is something to watch closely as it can lead to higher volatility. The report also touches on other items. For instance, item 8 through 11 cover various disclosures, but many of them are noted as not applicable for a semi-annual report or for open-end investment companies. This means we do not see the detailed discussions about disagreements with accountants, proxy voting matters, or remuneration of directors that might appear in other types of filings. It keeps the report focused on the fund's performance and holdings. The filing confirms that the company's disclosure controls and internal controls over financial reporting are effective as of a date within 90 days of the filing. This is standard, but important for ensuring the integrity of the reported numbers. Finally, the report is signed by Michael Beattie as Principal Executive Officer and Andrew Metzger as Principal Financial Officer, certifying the accuracy of the information. Looking at the broader picture, these funds are managed by SouthernSun Asset Management, LLC. The fact that they heavily invest in sectors like industrials and consumer discretionary and hold a somewhat concentrated portfolio of smaller to mid-sized companies suggests a strategy that is looking for growth and may be more sensitive to economic cycles. The high concentration of holdings among a few shareholders could mean faster price movements, both up and down, depending on those large investors' actions. The investment advisor, SouthernSun Asset Management LLC, is the key player here. Their focus on these specific sectors and the strategy of leveraging their expertise in value investing gives us insight into their approach. However, the significant fees and the concentration of shareholders are definitely points to consider for any potential investor. The fact that the small cap fund had a net investment loss, but still saw an increase in net assets due to realized gains on investments, is a common dynamic in actively managed funds, but it also highlights the importance of the fund manager's trading acumen. What I am actually looking for is how these bets on industrials and the heavier concentration in fewer companies plays out over the next reporting period, especially if there are any economic headwinds. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord in the description.